Good morning, everybody. This is the live market open for Tuesday, March 29th. I'm Yohay, Elam, Forex Crunch and Market Movers podcast, doing the show as usual for FX Street. Hope all of you enjoyed the long weekend. Anyway, some countries have been off, some on during some of the days. Anyway, now everybody is back to business. As usual, we'll cover recent developments in markets. We even had a few moves yesterday when liquidity was quite thin, various charts and levels. The next 24 hours, we have one big event and a few other small ones. And of course, your questions about charts, fundamentals, you name it. If you cannot see the chat box alongside the video, please go to the address on the screen, tlk.io/fxstreet-live-video. So what's going on in markets? A few things. First of all, talk about the figures we had yesterday that they hurt the dollar, but now we're seeing things, the greenback a bit coming back. Japan may introduce a stimulus program as the economy is doing a bit stuck, and there are also some doubts about the recent commodity comeback, more specifically the price of oil, which is sort of sliding. We'll talk all about that. In terms of data, yesterday it was, of course, a holiday in most of Europe, but in the United States, markets were open as usual. So we had the core PC price index, which is the Fed's favorite inflation figure, disappoint. It rose only 0.1% instead of 0.2 month over month, and year over year it rose 1.7, which is not too bad, but still under the Fed's 2% mark, and some had expected a small rise to 1.8. So it's sort of muddling along like many other figures in the US economy. Okay, I have your comment from Jax. They passed it at JPY. Yeah, we'll look at the yen quite soon. Other figures we had yesterday is personal spending came out at 0.1, personal income at plus 0.2, more or less as expected. Pending home sales, well, that isn't that important, but we had there a rise of 3.5. Okay, thanks for the headlines from Jax. Japan passes a record 96.7 trillion yen budget for fiscal year 2016. The fiscal year in Japan ends in a few days at the end of the first quarter. So in the next fiscal year, which begins just on Friday, they are expected to, they have, as Jax helps out here, they introduced a bigger budget, 96.7 trillion yen, and that includes stimulus because the economy, spending, wages are a bit stuck, and so is inflation, which is the target of the Bank of Japan. Anyway, let's look at a few charts before moving to the events we have later today. So, euro dollar. We had yesterday some weakness of the US dollar because of these poor figures from the United States, especially the core PC price index. So we moved all the way up to 112.15, a bit higher. This still remains resistance for me. 112.15 is also the post-Draghi high seen early in the month. So we're coming full circle. This line is worked nicely in the middle of the month. Yeah, nearly 3 weeks ago when Draghi introduced the stimulus package but said no further cuts. And now again it's working as resistance. Further resistance, week one at 112.50, followed by the high level of 113.75 up there. On the downside, perhaps 111.40, some support, but more serious support is at 110.70. Okay. Pound dollar also had a nice recovery yesterday, went exactly to 142.80, a line we mentioned a few times in the past, worked also as resistance back here on March 7th. So these lines work also here. Now it's sliding a bit to the downside. We're seeing a stronger dollar this morning, nothing earth-shattering. Another thing to mention in terms of market mood this morning is that we had, again, troubling news about an internal Egyptian flight, Egyptair from Cairo to Alexandria, or the other way around, I'm not sure. Anyway, it was kidnapped. It landed in Cyprus, in Larnaca, and it's still an ongoing event. There's still hostages in that airplane. This might be contributing to a damper mood, but it's not that huge like that morning last week when we had the Brussels bombings, but anyway, it's 1 week after those Brussels bombings, and now we have more bad news. We don't know what's the background at all. So, but anyway, it does impact perhaps the airline stocks, but so far, I think the impact on currency is limited. Dollar yen, here we are at 113.58. The general trend is to the upside. The move to the upside began. Weaker yen began during the Asian session with all this talk about the stimulus package from Japan. Now perhaps we're seeing buy the rumor, sell the fact, with the yen strengthening a bit instead of cutting short the trend. Perhaps we have resistance here at 113.80 or 113.75. Okay, maybe we'll just add a line here and examine how things develop. I have my line at 114, which is a round number. Let's see. So we had yesterday a weakening of dollar yen because of the weaker US data, and then we found support here at 113.10, a line we mentioned in the past, and then we had another rise with the stock. So with the talk about you can't hear any sound. Well, I think most of you can hear me, right? Yeah, I mean, I did see some responses. Anyway, so perhaps we're seeing now buy the rumor, sell the fact. Okay, let's continue. Dollar CAD, very interesting currency pair. Yesterday with the fall of, refresh the browser. Thanks, Linda. Refresh the browser and you'll see everything we had. But going back to the charts, we're at dollar CAD, found support at this line of 131.70. Dollar CAD is one of my favorites. For those of you subscribed to the Forex Crunch newsletter, you'll soon get the list of the five most predictable currency pairs. Dollar CAD appears there. Anyway, this line 131.70 worked as support here on March 11th, and now once again resistance, weak resistance here at 132.20. Currently we're in range. We're seeing some slide in oil prices. Okay, let's jump to oil, as we do quite often with when we talk about CAD. So we're seeing it in the price of WTI crude oil. We had a fall last week from the highs because of a rise in inventories and once again some fading hope about a production freeze by OPEC. Okay, we've seen some recovery yesterday. Another attempt to recapture $40 in WTI. Now we're seeing it slide once again. Let's update the line. This would be a better approximation. So I would say 38.30 works now as some kind of support for WTI crude oil. Barclays released a note that was echoed in markets quite a bit, that the commodity comeback is over, also saying things that I repeat here, just too much oil going around, too much supply, not enough demand, and the flexibility of the shale industry is also means that there's just each time the price rises, there will be more oil sloshing around to push down the price, and this flexibility is not so good for oil prices. Anyway, this impacts the Canadian dollar CAD within the range 131.70 to 132.20. Aussie dollar yesterday made a nice rise to the upside, 75.30. This is the current level. Now once again with this kind of dollar comeback this morning, it's sliding a bit down, but we've seen it rise yesterday on the weakness of US data, now sliding. Kiwi dollar made a very nice move yesterday thanks to these weak figures from the United States. Now it's sliding a bit lower. All in all, 67 works as support, but the pair is becoming a bit more choppy. Okay, let's continue with dollar Swiss. 97.50 is the current level. Resistance at 98, low support at 96.40. We can see dollar Swiss usually just mirroring euro dollar. Okay, so if You can see slide, consolidation, jump higher, and now a slide. Gradual rise, consolidation, drop here, and now another gradual rise. More or less, it's the same. It's a mirror image. Dollar Swiss, anyway, 98 to 96.40 are the levels to watch. And the explanation for this mirror image can be seen with Euro Swiss, which is very, very stable, currently hugging the 109 levels. 109 level. Let's continue. Euro pound 78.54 at the moment, finding some support, dropping just a bit to 78.50. Anyway, resistance remains at 79.30, which was temporarily broken at the highest level since December 2014. But since then we've gone down. It's a bit more sticky here. 78.50, I think, remains, my opinion, support. Further support at 77.40. Okay, Euro yen edging higher. This weakness of the yen and the stimulus package, and some stability in the euro pushes the pair above 127. But actually, if we update the lines also here, do some spring cleanup of lines, then we have 127.30 as resistance on euro yen, support at 125. Okay. Pound yen, weakness of the yen helps this drag on the pair. We had it trading very nicely in range between 158.50 and 160. Yesterday, this weakness of the US dollar gave a boost to the pound, mostly in the yen, not so much. And with the stimulus package in Japan now coming up, we're up to 161.72. Resistance remains at 162.20. Okay, this is the coverage for our usual roundup of currency pairs for the morning. Your questions on any one of these currency pairs or any additional currency pair, all these questions are, of course, very welcome. Okay. No need for a ticket. Nice jokes there. Anyway, let's talk about the events we have today, mostly in the US session. Let me check out. We had some monetary figures from Europe, but let's begin with the more important stuff. We have at 1 GMT, that's 3 here in Europe, or 2 p.m. in the UK now, with the daylight savings times shift in the United States. Also in Europe. It's the Case-Shiller HPI, the house price index. Let's look at that on the FX Read calendar here on Forex Crunch. So let's jump here. We're expecting an annual rise of 5.8 after 5.7. These are healthy figures. I mean, they're above inflation, but not the bubble style rises that we've seen before the crisis. So if we have more of the same, 5.7, 5.8, 5%, 6%, it's all good and it shouldn't have an impact. These figures were stable. A more important figure in terms of market movements, even though it doesn't always tell us much about the real economy, is the consumer confidence, this time from the Conference Board, not from the University of Michigan. A small rise from 92.2 to 94 points is on the cards. Okay. This figure had some trouble remaining above 100, and it's now ranging between 90 and 100. It's still the highest level since the financial crisis. So we are seeing it move up, but I don't know, perhaps it's consolidating and about to fall. Also, the University of Michigan's figure is stuck in this range, even the same numbers. Okay. Anyway, what else do we have on the agenda? The big event for today is, of course, the speech by Janet Yellen. So here I have it at it's 4:20 GMT. I think I put different hour on the slide. Okay, let's correct that. Yeah, so it's 6:20 here in Europe, so it's 4:20. Let's change it here to avoid confusion on the slide. And let's talk about that just a bit. Needless to say, this is the main event for the day. So Janet Yellen, the chair of the Federal Reserve, will speak in New York at the Economic Club. Her speech is about monetary policy, so it's not going to be a non-event. She is not going to talk about community banking or anything, I don't know, that doesn't move markets. It's going to move markets. Doesn't mean she'll say anything meaningful, but she can just say nothing. It will still move markets because of the anticipation towards the speech. Now, let's do a bit of background. 2 weeks ago, we had the Federal Reserve decision, the highly anticipated March decision. No rate hike was expected. No rate hike came. But the statement went to the extreme dovish side. Not only did they cut the dot plot for this year, the path of expected rate hikes, they also cut it for further years. They kept on seeing inflation as worrying, and they cut inflation forecasts as well. They talked about soft investments. Well, we've seen that materialize in the durable goods orders for the month of February, released just last week. So they were vindicated on this. And inflation, well, it didn't come out as expected, but I don't think it's really that bad. Okay. Anyway, that was very dovish, and that hurt the dollar a lot. Okay. And the following week, last week, we had other Fed speakers, not the top three, not Yellen, Fisher, and Dudley, but other ones, but quite a few of them talk about a rate hike even in April, okay, which is just, well, at the end of April. It's a month away, but that means that an upcoming rate decision, and they were in general upbeat about the economy. This was Lacker from the Philadelphia Fed, Lockhart from the Atlanta Fed, Williams from the San Francisco Fed, which are all sort of in the center, Bullard, which is from the St. Louis Fed, which is a known bull or hawk. But the surprising statement came also from Evans. He didn't talk about rate hike in April, but he did see several rate hikes this year, which is quite surprising from a person that is quite dovish. Anyway, and this helped the US dollar recover quite nicely last week. Okay, so many expect Yellen to clarify. Will she repeat her dovish sentiment from the Fed decision 2 weeks ago, or does she acknowledge some improvement? Another thing to watch out for, we have important figures coming up this week. The Fed might already have them. First and foremost, we're talking about the non-farm payrolls release on Friday, which includes not only the rise in jobs, expected rise, yeah, but also wages, which were quite disappointing last time. So will she give us a hint about something we don't know? My bias is that she will clear things up. I mean, well, clear things up maybe I'm expecting too much, because central bankers tend to say they intend not to rock the boat, to say on one hand, on the other hand, we're data dependent, things like that. But I think it would make sense for her to lean to the dovish side, especially after the durable goods orders and the not so convincing inflation figures from the core PCE price index, and to lean more to the dovish side, to hurt the US dollar more than, take sort of the opposite side from her colleagues that spoke up last week. But even if I'm right, and of course I may be right, I may be wrong, we have to look at what's priced into markets. So yesterday we did see the US dollar slide quite a bit, and now it's been on the recovery path. Well, just a bit, yeah. So I think that if we stay at the current levels, which is basically a bit unchanged, we're off the highs in euro dollar, more or less back to the previous sleepy range around the Easter break, then Yellen's words will come on sort of neutral ground, and she could have an impact in both ways. Okay, that means that if I'm right on the dovish side, then we could see the dollar suffer. That means in this case euro dollar rise back up, challenge once again the 112.15, 112.50, and even higher. But she might know something we don't know about the NFP. and maybe say something positive. Maybe wages are rising. And another thing, if we see the dollar weakening, if we see again euro dollar climb above 112, 112.15, 112.50 towards the release, then even if Yellen goes dovish, we could see a buy the rumor, sell the fact. Okay, so market reaction to Yellen, I expect a significant market reaction. That's number one. Secondly, the market reaction depends on the state of the dollar towards the reaction. If we see it at the dollar at current levels, at least against the euro, then it's, neutral. If she goes dovish, the dollar falls, hawkish, the dollar strengthens. But if we see the dollar weak, then even if she goes dovish, this might not have such a strong effect. I hope I made things clear with this conclusion. Anyway, this is a highly anticipated talk. She will speak again next week, towards the end of next week. But any speech of hers, and this one is about monetary policy, should have a significant impact. Let's see some comments here. First of all, thanks, Adinda, for sharing the link to the YouTube video. Bullard said that April and June are live events for potentially more tightening. What's your interpretation? My interpretation is that Bullard is always optimistic, sees the glass half full, and it's non-news because he's always optimistic. When he becomes dovish, that's when it has a big impact on markets, okay? Specifically, also Yellen said it's a live meeting, but they always repeat that every meeting is a live meeting, okay? So that's it's always the same in this sense. So it's just it's normal words like they say they're data dependent. There's a difference between saying a live meeting or saying that there's a good chance or they want to raise rates in April. So anyway, when Bullard is bullish, you can ignore, okay? When Evans is bullish of the Chicago Fed, when the dove becomes a hawk, then it's news. If Bullard becomes dovish, that's news, okay? Anyway, this is the live coverage of Yellen's speech, and no, at least not that I know of. And Ed, I don't think you're banned. Not yet, at least. Anyway, so it's a big event. Even if she doesn't say anything, markets are still sort of looking forward to this event, and this means market reaction even if she doesn't say anything. April Fed meeting doesn't have any press conference to explain eventual rises. They could still hike. In theory, every meeting is a live meeting. They could raise rates without a press conference. They could also call a press conference at the last moment if they deem it necessary. Okay, so that's the theory. Okay, in theory, everything can happen. They can raise rates. They can decide not to raise rates. They can call a press conference or not. In practice, we've seen they're moving so slowly that I think that I expect and markets expect in general that we will not have any kind of we will not have a rate hike. We will not have a change in policy without a press conference accompanying that and fresh forecasts. Now, what I'm showing you now on the screen is the implied probability of a Fed hike according to bond markets. So it's around 12%, less than 12% for rate hike in April. In June, given the recent not really convincing numbers from the durable goods orders and PC inflation, the chances are down once again. So against the rate hike now, almost 62%. It was 58 yesterday. Okay, so we did have better than expected GDP figures, but that's a bit old news. Probably they're preparing the market for a hike in June in order to have that priced in. Okay. and I don't have a good idea now, but try refreshing. I hope the technical issues will be sorted out. Yeah, what we could have regarding what we could have in April is a preparation for June, as you mentioned, Fabian, because the Fed did give us a big hint in October regarding December. Okay, they told us towards the next meeting we'll consider this and this and this and this, and then we heard also Fed officials talking about, yeah, we're about to do this historic move. We're on it. Okay, so we might get that in April as well. We might hear on April 27th that in June, unless data is a total disaster, we'll have rate hikes. So we might have that. According to bond markets, the June rate hike is not priced in. I mean, it's not an outside chance, but there's a majority against. Okay, so anything can happen. Of course, we'll have few things to watch towards April 27th. We have a full month until that. I would mention the non-farm payrolls, of course, this week, and it's also important to note that with each time we have the Fed decision that is not accompanied by a press conference, we also have the first release of GDP in the same week. Okay, the first release of GDP for the previous quarter. The most interesting GDP release, okay? So in the same week that we have the Fed decision, don't remember if it's the same day or the following day, but it doesn't matter. The Fed will have the GDP figures in front of its eyes. So this will also provide some information for the Fed to chew on, okay? So we'll have, of course, non-farm payrolls with the wages. We'll have GDP figures, and we'll have other figures as well, such as retail sales, PMIs, you name it. Okay, so lots of speculation. There is a chance of rate hike in June, but I would say it's more 50-50 than 60-40, but we'll see. Yeah, a rate hike in June and then in December would make sense. The Fed grand plan once every 6 months, yeah. It also makes sense. I would add that in terms of the elections cycle. So now we're in primary season, but still far away from the general elections in November. A rate hike in September. The next time there is another opportunity to raise rates when there is a press conference is just too close to the elections. All right, so yeah, June and December makes sense, but they might not do anything in June as well. How do you track US inflation expectations? I don't track the inflation expectations directly. I look at the data itself, and the data is two things I'm looking at. First of all, the general CPI figures that we have, well, once a month. Core CPI currently standing at 2.3, and also the Fed's favorite inflation figure, which is the core PCE price index, this one, okay? We had yesterday, it remained at 1.7, okay? So that's the Fed's favorite core inflation figure. That's what I see as important. Okay, talk about other events we already had today. See if we're not missing anything. Okay, we had some monetary data coming out here from the Eurozone. So private loans are now rising at an accelerated pace of 1.6 instead of 1.4. Still a bit mediocre. And M3 money supply is unchanged at 5%. These are not market movers. Oh, I see that another event popped up, or that I missed before. A speech by John Williams of the San Francisco Fed. Yeah, at 11:15 here. That means 9:15 GMT. Okay, for those of you trading the Canadian dollar, we have some figures here, but they're not that important even for the loonie. Yeah, and regarding oil, we have the API weekly crude oil stock for March 25th. Shouldn't be, I mean, it does help shape expectations for the crude oil release on Wednesday, just tomorrow, but it's not that huge, okay? Anyway, last time we had a big bump of 8.7 million barrels. Okay, and at night we have industrial production out of Japan, but with all this talk about stimulus in Japan, stimulus package, a bigger budget, it overshadows industrial output and building permits in New Zealand. Last time they dropped 8.2, but it's a very, very volatile figure, so maybe now we'll have a big bounce. Bottom line, US today the dollar is in focus, with Yellen's speech being the main event, and also I think consumer confidence can have a lot of impact. Okay. Take another look at currencies. Wow. During the show, we aren't seeing a big bounce so far. Try to get you up to speed with what's happening in. I see another question here. Shouldn't fiscal stimulus make monetary stimulus less likely? Yeah, that's a good point. Yeah, in theory it does. And then when we that's what happened. That's what we're seeing now in Canada. Okay. But in this case, it doesn't apply for Japan. In general, if the government in Japan, we have such a huge monetary stimulus package that if the government decides to enter a bigger deficit to raise more money, it could imply that the Bank of Japan could print even more. Anyway, the government is about to create more money in this case. That's how markets see it, and that's good for stocks. And that weakens the yen. It's sort of more of a risk-on atmosphere in Japan. You're right. If you take the case to Canada, in Canada the debt GDP ratio is a totally different story. It's relatively low. In Japan, it's huge. It's more than 200%. Anyway, in Canada, the Bank of Canada told us that it's waiting to hear from the government before acting. And now that the government did introduce a stimulus budget, the Bank of Canada has less need to act. A stronger Canadian dollar. But in Japan's case, fiscal stimulus is sort of in line with monetary stimulus, and could have weakening effect. The more risk-on effect, higher stocks. When stocks are rising in Japan, the yen is sliding. Okay, I hope that makes sense. Thank you, Adinda, for helping out. Yeah, recording of the show is always available on FX Street, and also I publish it in advance. I mean, the preview of the live broadcast, and where you can also watch the show on Forex Crunch, and we also have the wrap up always of the show as a separate video clip. On Fridays we do a preview for the following for the next week. Yeah. Okay. Anyway, currently dollar yen is rising towards the highs. Let's see if we have some news about that Egyptian plane in Cyprus, something that is grabbing the headlines this morning, but without significant most passengers have been freed from the plane. That's good news. It looks not terror related. The Egyptian hijacker claiming to have some explosives on his body, wants to see his ex-wife, which is Cypriot. Okay, so still quite scary news, but looks, if it's not related to terrorism, yeah, it has less market impacts and more bad news from this broken world. A suicide bomber kills 3, wounds 27 in central Baghdad. I'm reading out from Jack's comment. Luca does not want to see his ex-wife. Anyway, I would say at this point that geopolitical news has no effect on currencies this morning. It did have a big effect. Thanks, Jax, quoting Reuters. They also had a bombing in Pakistan, in Lahore, Pakistan, over the weekend. Lots of tragic news. Anyway, what we are probably not going to talk about a lot this week is US politics, because it's a week off for a change. No debate and no primaries. Next event is only at the beginning of next week. But I'm sure it'll be important throughout Q2. Okay. Yeah, okay. Question here from Jack's pairs to watch out for today. Okay, the US dollar is left front and center today, but which pairs should you trade against? That's a good question, I guess. I mean, well, I created this question. If she comes out dovish, let's look which currencies might be stronger this morning. Well, the pound is on a recovery path, but the Brexit fears are still quite strong. We don't have significant data from other places in the world. But the euro remains bid. I would say stick to the majors. Perhaps euro dollar is currently more neutral. So let's say if euro dollar remains around current ranges around 111.80, 111.60, sort of closer to the previous levels around the boring Easter levels, then we could have euro dollar shoot up if she goes dovish, even though many expect her to go dovish. Well, but it's unclear. If we have euro dollar already around 112.15 and she goes dovish, it could be buy the rumor, sell the fact. Okay. Anyway, I would focus on euro dollar. Should boost commodities too logically, so maybe the Aussie and CAD. Yeah, also the Aussie and CAD could rise. They are not equal. I see Canadian dollar is somewhat weaker at the moment, just because oil prices are sort of under pressure. So I would go for, if you're going for a commodity currency, perhaps the Australian dollar, which is now falling. If she goes dovish, it could have an opportunity to rise. So yeah, so I would say first euro dollar, which is more sort of neutral, and then Aussie dollar. CAD, if she goes dovish, I'm not so sure. Okay, because I'm not sure she'll give a big boost to oil prices, which are under pressure. And no, dollar Swiss would not be my preferred currency pair, because it's never my preferred currency pair. As you say, I'm a hater, but I have a good reason to shy away from the Swiss franc. That's because the Swiss National Bank intervenes quite a lot. Of course, they intervene in Euro Swiss. Anyway, the Swiss franc used to be an excellent safe haven currency. That was quite some time ago. This is not the case anymore. Okay. Yeah, so anyway, so I would say once again, the currencies to watch out for today: euro dollar, and I would say also Aussie dollar in relation to Yellen, because we don't have anything from those countries, any bias today. Okay, so perhaps they would be the better pairs to trade against the US dollar. She'll try to not rock the boat. Doesn't mean she can succeed in that. All right. Bank of Japan and the S&B working to keep the dollar in check. I don't know. Many central banks are intervening in one way or another. We also know about interventions from the Reserve Bank of New Zealand from time to time. This doesn't have a big impact on markets, but only on the New Zealand dollar. The Chinese authorities are intervening, and many countries are just speaking out. So we had Mario Draghi, which said we don't have a target, a foreign exchange target, but he still did manage to move the euro, and he did warn about the exchange rate. So verbal intervention and rumors and leaks are another way of intervening without intervening directly in markets. Okay, but the Bank of Japan intervenes from time to time. It's usually quite easy to see that. The Swiss authorities, they say it out loud that they're intervening. Nobody gives them a hard time for that because, suspect because there are many bank account holders over there in Switzerland. Anyway, it's also a much smaller country with a smaller impact on the global economy. These interventions are more stealth. Okay, so let's get to the wrap-up for today. This is the wrap-up for the live market open for Tuesday, March 29th. We're back to business. The long weekend is over. Mood in markets is a bit mixed with doubts about the recent commodity comeback, a bit of diverted attention because of the hijacking of the Egyptian plane, even though it doesn't seem to be really market related at the moment or having a market impact. Better said, yesterday we had some figures from the United States which were a bit disappointing. We had core PC price index rise 0.1 month over month and 1.7 year over year, a bit worse than expected. Personal spending came out at 0.1, personal income 0.2, a bit mediocre. Today we have a focus on the United States of America once again. The Case-Shiller house price index is expected to remain steady to show that the housing sector is okay. Consumer confidence is expected to rise. That's a more important event in terms of moving markets. And the big event for today is a speech by Janet Yellen, the chair of the Federal Reserve. It is about monetary policy, so I do expect action, okay? And it's she might want to clarify what's going on with the Fed's policy. Are they seeing the glass half full or glass empty? Her last appearance around the rate statement was very dovish, so was the statement in the forecast. Since then, we've heard some hawkish members. I suspect she'll take the dovish side, but perhaps she knows something that we do not know about the NFP on Friday or other things. Anyway, it's a big event for markets, even if she will try to keep us bored. Let's look at a few currency pairs. Euro dollar sliding from the highs it went to yesterday following the US dollar weakness. So now we're back to lower levels. Perhaps 111.40 is support, 112.15 is resistance, currently at 111.80 more or less. Pound dollar found resistance at 142.80, currently back down at 142.30. Still worries about a Brexit. Lots of talk. We're less than 3 months away, but nothing to move the pound this morning. It's off the lows thanks to the weakness of the US dollar, but nothing else. 140.50 remains very critical support, double bottom. Dollar yen, rumors materializing about additional stimulus from the government, not from the Bank of Japan. So we're reaching the highs here, 113.75 high for today, or the resistance for today, 114, the next level, 114.50. More stimulus from the government in Japan means more stuff for the Bank of Japan to buy, more government bonds, and support 113.10. Dollar CAD currently very well entrenched in range, 131.70 to 132.20. Oil prices are a bit sliding, and this weighs on the Canadian dollar. Aussie dollar sliding with this fresh dollar strength this morning but not erasing all the gains seen yesterday. Okay, currently 75.25. 75 is support, 76 is resistance. And last, Kiwi dollar maintaining most of its gains from yesterday, looking relatively strong. 67.36 at the moment. 67 and 68.20 are the lines to watch over there. Okay, so that's what's going on today in the markets. Thank you very much, everybody, for coming to the show, for the great questions, for even providing news, charts, everything. I hope tomorrow nobody will have technical problems. Anyway, I wish everybody a safe and successful trading day. We'll be here tomorrow analyzing what Yellen said or did not say, and preparing you for some events. Busy day tomorrow as well. Okay, so that's it for today. Thank you and bye-bye.